Shares of Nykaa trade with cuts of nearly 4% after a block deal worth nearly 1,200 crore rupees took place. Sources say early investors Harinder Pal Singh Banga and Indra Banga are likely sellers. They sold 2.1% stake.
Avenue Supermarts falls close to around 2.5 to 3% on the back of its Q1 business update. The company's revenue sees a 16% uptick, while store addition grows 14% year-on-year. Goldman Sachs, they maintain a sell rating on the stock, citing weaker than expected sales growth.
Tata Power trades lower as the company is set to pay $490 million in damages to Kleros Capital Partners following a partial award by an arbitral tribunal under the SIAC.
And Punjab National Bank falls in trade after its Q1 business update failed to enthuse the street. Analysts say the bank's loan growth reflects system growth slowdown, while deposit growth is strong.
And Coromandel rises in trade after receiving a CCI approval acquisition of majority stake in NACL for about 820 crores.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam, and the markets are in perfect form today. The Nifty is up close to under 100 points, going by like how our captain yesterday played. Gill scored a century. The markets are up 100 points. I'll tell you what, we'll want a triple century coming in for the Nifty Bank. That's what will take us higher. That's what will take us higher. But, you know, for the Team India, we need a score over 400
I think so, us to have a bit of a chance. You know, given the last two games where the tail did not perform as well, today the lower order batters will have to perform well. But that's about the Indian cricket team, but that's also about the Indian markets, because you have to have the second half of trade do well in today's session, because there has been a fair amount of call writing. If we sustain at these levels for a bit, those call writers will be taken to the cleaners. If our lower order bats well, England will be taken to the cleaners. Well,
that's right, Mangalam, and I'm hoping, you know, just on the cricket first, that I hope Jadeja, you know, he stays there longer, because then the runs come faster, right? Pant, Jadeja, they are scorers, and in fast time as well. So
and Jadeja about time as well, and you know, what a great player that he's been. The last few games haven't been very good, so let's see where Jadeja goes from here on. Especially for Team India and his own career, it is an important knock that he has to play. But enough about the markets and cricket for now. Let's go back to the markets at the high point of trade for the frontline index. Sachidanand Tekar of Trade Bulls joins in. Sachi, you know, you can tell us about the Nifty chart, and you can also tell us about Team India's chart.
Well, I think both the charts are looking positive, have always been positive. So if you look at Nifty itself, you know, the way it has responded to that support at 25,400, 450, where it's 20-day exponential moving average, 5-day exponential moving average is placed, you know, Nifty has been sustaining about it on a closing basis. Even today, the call writing action at 25,600 would be significant. But if you look at the way the Nifty is rebounding, plus the constituents which are pushing it higher, there's a good chance that we may see this particular swing extending towards 25,700 during the day. We are expecting the expiry to shape up somewhere close to 25,650, 550 kind of a zone. So the bias for the Nifty for the day at least remains positive. Even right now, some momentum longs can be considered, keeping a stop loss at 25,510 on closing basis. On the higher side, eventually we see the Nifty, you know, scaling towards 26,000. When we look at Nifty Bank, there is a very strong, hurdle at 57,500 at least for the day. So we are not expecting any major turnaround there. But overall, both the indices should stay in the positive zone.
All right, it will be very interesting to see if the Nifty Bank sustains past the current levels as well, because 57,150 to 57,200 were important supports when the Nifty Bank was a lot higher, and that was the support that was broken yesterday as well. So we'll watch out for that. But individual stocks, they're doing a lot, in today's trading session. So say, for instance, Blue Star, we had the management join us today. That stock's moved to the high point of trade. Quick Heal is another one which is up 4%. We're seeing good traction in names like RateGain as well, up 7.5%. Dodla Dairy, wide swathe of stocks doing well from across sectors. Would you have long positions as trading ideas, or maybe you think that this rally should be used as shorting opportunities too?
Mangalam, clearly the bias remains positive for the index. And if you look at all the constituents, right now the focus is on Nifty Auto. Now, if you look at the overall chart structure, it looks like, the sector itself is positioning for a 10% upside. We have seen that on on its weekly scale, it had been consolidating for almost 8 weeks. We saw narrow range action within this particular pocket. But if you look at the overall structure, it looks like a classic bullish flag formation ready for a breakout. On an immediate basis, we may see a swing towards 24,120, but eventually, we see this particular swing extending towards 24,500 in a day or so. And the pattern target is placed somewhere close to around 26,700. So I think Nifty Auto should be Nifty Auto should be on your radar. And from that pocket, we have recommended to our clients a stock like Maruti. Now here, if you look at the weekly, monthly charts, it has been consolidating very well. It maintained a very strong support bias near to that 12,400 zone, where its 50-day exponential moving average was placed. Yesterday, despite of the market weakness, this particular stock displayed strength, and bullish formation was displayed on its daily scale. And from there, the momentum has been sustaining. So we are expecting that this particular rally may continue towards 13,160 and extend towards 13,600. And hence, we are still recommending building fresh long positions in a stock like Maruti, keeping a stop loss at 12,600 on closing basis. The other stock is Hero MotoCorp. Even here, the consolidation has been very healthy. A similar kind of a structure, it has rebounded well from its 50-day exponential moving average support, which is placed at 4180. The overall structure looks interesting because 6 weeks of consolidation is now looking mature, and we may see a rebound back towards 4,400. So keeping a target at 4,440, we are recommending building fresh long positions in Hero MotoCorp. The stop loss for the trade should be placed at 4160.
Okay, all right. Got that, Sachi. Before we let you go, just one quick word on Vodafone Idea. We had Mr. Scindia, who's been talking about that in any industry, a duopoly doesn't work. He wants a larger number of players. So in all probability, Vodafone Idea survives. And that would be good news for customers. But will it be good news for shareholders? As we speak, the stock has moved to the high point of the day.
The stock has been outperforming since last 2 weeks. Now, if you look at the overall structure, it looks like a classic, breakout from a downward sloping wedge. Now, such kind of formations are, signs of a near-term bottom. So probably the support that it displayed somewhere close to around 6.5, I think that particular support may not be breached quickly, and we may see this particular rally getting extended towards 8.5 to 10. So I think it's better to remain intact, keep a stop loss at 6.5 on a weekly closing basis, keep accumulating this counter. We may see this particular rally getting extended towards level close to 10. So I think it's a positive setup, and the structure is getting better day by day.
All right. And do you have a call on M&M Financial? Because that stock also has moved to the high point of trade right now. Reported a decent set of first quarter update coming in, and the stock is extending its gains right now. So it's up around 4.5%. And a large part of the gains have come by in the last 20, 30 minutes or so. M&M Financials.
Mangalam, it's a good, strong rebound. The stock has already almost, engulfed 3 days of its price formation. So we may see further rally above 280 zone. So I think 280 would be an intraday target. One can continue holding long positions with a stop loss at 268 on the lower side. In case if we see this particular level getting breached, the rally may extend towards 296 in a day or so. So probably one can retain their long positions.
Take that point, Sachi. Thank you so much for joining in, giving us a view on the indices and a lot of stocks today. We'll take your leave on that note. With that, we'll also get you some ideas for profit. This one comes in from our colleagues at Money Control Pro, and today we have Neha Dave joining in. Neha.
Today's idea is CSB Bank, which reported muted earnings in FY25 as profitability was dragged down by a sharp fall in margins and elevated operating expenses. However, the management has guided return on asset to be in the range of 1.5 to 1.8% and return on equity around 15 to 17% in FY26. Now, what will drive the improvement in profitability going forward? CSB Bank will benefit from the sharp fall in interest rates because 60% of its loan book is fixed rate in nature, which will not get repriced lower immediately. Also, around 45% of its loan book consists of gold loans, which will continue yielding around 11 to 12%. Hence, management is confident of maintaining the net interest margin of 4% in FY26. ROA kicker can also come from non-interest income as the bank's investment book will benefit from the fall in the GSEC yields. The key growth constraint for a small bank like CSB Bank was the liability book or the deposit book because of the tight liquidity in FY25. However, with the liquidity condition improving, the management is much more confident of the asset growth in FY26. Most importantly, CSB Bank benefits immensely from its gold loan portfolio, which offers higher yield but has lower credit costs and lower risk weights. In terms of valuation, the stock is currently trading at around 1.2 times the book value estimated for FY27. The valuation is attractive given the return ratios and a growth potential on a small balance sheet.
Okay, all right. Well, time to slip into a short break. But remember to tune in to the all-new CNBC TV18 Prime. We bring you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon. That's for the global reset. At 1 p.m., we talk commodities, currencies, as well as cryptos on the Big C. And then Global Lens at 8:30 p.m.
Welcome back. You're watching us here on Chartbusters on CNBC TV18. Let's talk about GMR Airports. Vivek joins in to tell us why this stock is buzzing in trade today. Vivek.
Well, good morning. It's an important development as far as GMR Airports is concerned. It's a technical development and also some relief coming in as far as regulatory concerns were concerned. So first, yesterday, the company gave an update to the exchanges late evening. So what's actually happened is that the TDSAT has recently squashed AERA's earlier HRAB calculation for DIAL Airport. What does this mean? Let's first simplify it. Number one, the TDSAT, the regulatory authority that actually goes ahead and decides the tariffs as well as the calculation for tariffs as well as calculations for the computation of what exactly DIAL Airport, which is the Delhi airport, can actually claim from authorities. Now, there has been a development and there has been an order coming in that actually favors GMR Airports. So now, what they are actually saying is that HRAB, which is the notional asset base, which is the hybrid regulatory asset base, which is key to setting aero tariffs, they are saying that this particular tariff base itself was set wrong earlier, which implies that there could be a higher upending as far as the HRAB is concerned, indicating that GMR Airports retrospectively could actually gain further tariff revenue. Now, this is an important development as far as GMR is concerned. In fact, what Jeffrey says is that if the final ruling actually favors Delhi Airport, the revised HRAB could significantly raise allowable tariff recovery due to past under-recoveries.
Okay, all right. Thanks a lot, Vivek, for joining in and explaining that to us. But yesterday we had a few debutants in Team India. And today, in fact, getting off the mark on CNBC TV18 is Gaurav, who's joining us yet again to do a quick analysis on the newly listed stock, HDB Financial. Gaurav, tell us more.
Well, yes, when we talk about HDB Financial, we have already seen that the stock listed at 13% premium yesterday. And even today, the stock is up more than 5%. And the reason being that when we look at the business model and the valuation, they seem to be in a little favor of the stock. So first, let's understand the business. Company has AUM of 1 lakh crore rupees and the growth of around 20% CAGR over the last 4 years. And what is actually positive about company is that the gross NPAs have been a little lower than other peers. Other than that, when we talk about some other diversification in terms of portfolio, there also we are seeing company is well placed if we compare it with the peers. But on the other hand, there are some hiccups for the company. So first, let's talk about loan book CAGR, growth CAGR. It is actually at 20%, a little lower than other peers like Cholamandalam and Bajaj Finance. When we look at some other factors like ROA also, there also we are seeing a little bit of lower ROAs from company if we compare it with the other peers. And as a result, when we look at the listing scenario, valuation was a little below what other peers are trading at. It came in at around 3 times price to book on a 1-year forward basis, but given the current market price also, it is trading at 3.4 to 3.5 times, which is still at a comfortable level. So when we look at the valuation, even if we consider 30% upside from the listing of 740 rupees, the stock will still trade at around 3.9 times the price to book value, which is actually comfortable when we compare it with the peers like Cholamandalam Investment, because the stock now currently trades at around 4.7 times, while Bajaj Finance also trades at around 5 times. So definitely, when we look at valuation, it still gives some comfort in terms of valuation for the company. When we look at the other factors, now let's not forget that the grey market premium for this stock was at around 1200 rupees. And if we consider that price, now there it seems a little stretched, because the valuation then comes at 4.9 times. And given the return portfolio, it will be a little difficult for the company in terms of fundamental analysis. But definitely at this moment, it seems that the stock is trading in a comfortable level in terms of valuation, and it still has some upside to go.
Take that point. Thank you, Gaurav, for joining in and giving us an update on HDB Financials. What we'll do with that is slip into a short break. And as we do that, here's some good news for all you viewers. India's business news leader, which is CNBC-TV18. It's now just a click away. You can see the all-new CNBC-TV18 mobile app, which gives you instant access to breaking news, in-depth articles, all the financial world updates at your fingertips. All you got to do is download the app from either the Apple Store or the Google Play Store, or what you can do is just scan that code, which is up for you on the screen.
Welcome back. A lot of traction actually in the broader markets. Though the headline index is mildly higher, there are quite a few stocks actually that are doing a thing of their own. Pull up RateGain. That stock is now up close to around 6.5%. So good move is what we're seeing on that name. Narayana Health as well. The stock has actually seen a bit of a re-rating in the last few years. It continues to move well. So good up move on that name as well. But let's talk about the US-India trade talks. Government sources say that the interim trade deal could be signed with the US within the next 2 days. Abhimanyu joins us to fill us in with more details on that. Abhimanyu?
Well, intense negotiations are underway in Washington, D.C., where India's chief negotiator, Rajesh Agrawal, has gone along with the entire trade negotiation team, and several issues, several tariff lines are being discussed. Of course, government sources have also communicated that none of India's interests would be compromised, particularly in the dairy and agriculture sector. And also, it has been indicated by sources so far that the entire sectors of dairy and agriculture cannot be opened. However, some piecemeal relaxations may be given to niche products, premium products, which are often imported into India from the United States, which may involve pecan nuts or even Washington apples and walnuts for that matter. It remains to be seen how early the negotiations are going to conclude, even as the 9th July deadline for the end of the stay on reciprocal tariffs is fast approaching. So, of course, both the sides are keen to seal a deal. However, there is no desperation per se. That was the word which had initially been communicated from government sources. Now, negotiations are continuing between both the sides, and also the US is negotiating with several other geographies. India is also negotiating FTAs with several other geographies to hedge its overall risks, even as all options remain open with respect to signing of a trade deal, of a bilateral trade agreement. Now, this is an interim deal being negotiated at this point of time, and following which the first tranche of a BTA would be discussed. And for that, of course, both the sides are looking to sign the first tranche by September or October of this year, which would be followed by a complete trade deal. So the interim deal will involve several tariff lines, thousands of tariff lines, followed by the first tranche of the deal, which will also involve several other goods and also possibly some bit of services, which would be followed by a full-fledged deal. So an interim deal right now is being discussed, and it remains to be seen how early it is going to be concluded, and more importantly, which all tariff lines are going to remain a part of it.
Abhimanyu, thank you so much for that. With that, we're out of time on this edition of Chartbusters. All 4 lights on your screen in bright green. So what we'll do is leave it to the team of Trading Art to take the market action forward. Thank you for watching.